Welcome back to Trading 360. Time now for our 360 round. For that, I want to bring in our panel to discuss Cisco's latest quarterly report. We've got Cory Johnson, Chief Market Strategist at Epistrophe Capital Research, and Tom Essaye, founder of the Sevens Report. Thank you both for joining us. Cory, why don't I start with you? Your take on Cisco's latest results. They beat expectations on both the top and line. Their forecast is in line with expectations. The stock is getting hit a little bit here today, down 1.5%, but you've got some broad market weakness as well here. What's your take?
Look, beating expectations just means that analysts like me were wrong. It has nothing to do with the company. But the company is showing, Cisco's actually showing some really nice growth here, and they had some really positive things to say on the conference call that were really interesting. So their networking business, you think Cisco, you think networking. The networking business is doing really, really well. And the reason that's interesting is because there is so much AI spend happening on semiconductors, on data center build-outs, on optical networking and things that make data centers work, and the Dells and the HPEs of the world, that you might think that Cisco would kind of be left on the side, that networking, broader networking, wouldn't be a focus of spend. And what Cisco told us in this quarter is that it is that there's a lot of spending on networking, that AI infrastructure growth means growth for Cisco in the networking segment, which is 70% of their revenues. I thought it was a really strong quarter for Cisco.
Okay, Cory, I want to come back to you on AI and the growth story there in just a minute. I want to get Tom's take, though, on their results. Tom, what's your take?
Yeah, I think it was okay. I mean, there's nothing wrong with the Cisco print. They beat on earnings and revenue. They tweaked guidance a little bit higher. I think that the stock's disappointing reaction is more a function of the environment, right? In tech investors, especially at these valuations and especially after these runs, they want to see better guidance. They want to see more excitement. And while the Cisco print was very good, it was also sort of meh. There wasn't anything to get super excited about from an AI standpoint. Now, obviously, revenues were better than they expected. But I think that there were some analysts that, seeing all this CapEx spend that's going on, were hoping for a bit better guidance. And we didn't get that much of a bump. So there's certainly nothing to be upset about in this report. They're executing. They're doing well. But I think in order to get a stock to bounce after earnings, especially in this environment, there's got to be more, and they just didn't deliver it.
Okay, so, I mean, that begs the question, is basically a solid execution not enough? And then to talk a little bit more about that AI growth story, Cory, I'm curious to know your thoughts on this. Look, they pointed out that this is more than double what their expectations were. Their annual targeted top $2 billion for the AI-related orders there. Is that growth sustainable, Cory?
Look, I think so. I think that this hints at this really interesting idea, and I haven't thought a lot about this, and I hadn't heard this before. And I should mention, the stock's up 55% in the last year or so, off I'm looking at my Thinkorswim, as everyone should, right? Down about 2% today, so up 55% a year, down 2% in a day. I would say that's a mad reaction as well. But the notion that companies are going to first, as the enterprise world at large addresses AI, they're going to want a different stack of enterprise hardware, not just access to AI and large language models, but they're really going to want to have an entire new networking stack within their own companies, all kinds of companies. That's a new idea. And the idea that there's going to be a giant tech refresh that goes beyond the world of AI kind of makes sense. But I think this is kind of the first notes we've heard of this, and that would be really good news for all tech vendors, and not just the tech vendors selling into AI data centers, which of course is a hot spot in the last year. And I think it's something to keep an eye on. I should also point out that their security business, which was massively increased by the acquisition of Splunk, which has now anniversaried. Their security business is growing. Splunk is growing. Splunk was not growing going into the acquisition. Their security business at Cisco was up 9%. And 9% is not a double-digit number. Even I can do that math. But it suggests that the thing that Cisco is most amazing at, and it has been for decades, is acquisitions. I would argue that no other company in the history of technology has been so good at acquisitions as Cisco, because they bring companies in, they fold them into the network of the salespeople and the technologies that Cisco's offered before those companies were brought in, and they grow those businesses. And it hasn't always been good for stockholders. They spend a lot of stock to do these deals. They issue a lot of options to do these deals. They buy back the shares, and the share count kind of stays the same. But it's been a really impressive technology story at Cisco, and it remains as such with the growth in Splunk.
Tom, I want to ask your reaction to this. So this is something the T word came up on the earnings call. CFO saying, quote, while we have some clarity on tariffs, we are still operating in a complex environment. How much of a risk do you see tariffs and kind of the macro uncertainty that's unfolding to IT budgets this year and how it can impact Cisco?
I don't view it as much of a risk, to be honest, because I think that these large scale, large cap, mega cap tech companies are existing in this sort of AI kind of bubble at the moment, right? That's being fueled by massive capex from the even bigger tech companies out there. And I think that the other guest raises a good point. Are we entering sort of what could be a little bit of a refresh of the Y2K hardware and software event that happened at the beginning of the century, where all of a sudden it pulled forward all this demand for technology equipment that ended up, goosing these earnings and things like that. I think that's worth a think. I think it's possible, and that insulates these companies from the broader tariff and macroeconomic environment as much as they can. I mean, in the end, with tariffs, by the time you get done cutting through all the exemptions and everything like that, I think that these mega cap tech companies have actually come out quite well.
All right. Well, we will leave our conversation there for today. Cory, I think the fine point to end on is, to your point, even with the dip today that we're seeing, that stock is up more than 50% year to date.
Yeah.
All right. Well, pointed out
Cisco.
there.
26 years later, here we are. Flashbacks.
Yeah, this is true. All right. That's Cory Johnson from Epistrophe Capital Research and Tom Essaye, founder of the Sevens Report. Thank you both.